The future of inheritance tax. What you need to know. There are whispers that inheritance tax changes could be coming in the upcoming budget, and it's something you should definitely know about, especially if you are a homeowner or have any wealth to pass on to the next generation. So, what's all this about? With many people expecting a rise in capital gains tax, there has been a surge in sales of assets in recent weeks. HM Revenue and Customs benefited from record CGT receipts in August as a number of landlords and investors sold their properties according to figures published last week. Inheritance tax overview. The current inheritance tax threshold, or what is called the nil-rate ban, allows individuals to pass on up to £325,000 tax-free. On top of that, there is another allowance called the residence nil-rate ban. This helps people pass on up to £175,000 of the value of their home without paying any tax. Add those together, and that is £500,000 that you can leave to your family tax-free. And if you are married or in a civil partnership, you can combine these allowances, meaning a couple can leave up to £1 million to their family without paying any inheritance tax. Sounds pretty straightforward. Possible changes. But where it gets interesting, the Resolution Foundation, a major think tank, has suggested scrapping that extra £175,000 allowance. The residence nil-rate ban, it was introduced in 2017, and getting rid of it could bring an extra £2 billion into the treasury every year. Homes in the UK. So if the government moves forward with this in the upcoming October budget, what does that mean for you? Let's take an example. A couple with a home worth £800,000 and another £200,000 in savings and assets currently would not have to pay any inheritance tax on that £1 million total. But if they remove the residence nil-rate ban, suddenly they would only be able to pass on £650,000 tax-free. That means their family would face a 40% tax on the remaining £350,000, so an extra £140,000 tax bill. That is a big change, especially for those families who have been planning their estates. Under the current rules, it could hit many middle-income households who have seen property values shoot up in the recent years. Property prices. To put this into perspective, in 2021-22, nearly 26,000 families claimed this extra allowance, protecting £6.5 billion worth of property and saving £2.6 billion in inheritance tax. So this change could bring a lot more families into the inheritance tax net. But what is the reason behind these potential changes? Chancellor Rachel Reeves has said that the government is facing a £20 billion black hole in public finances, and raising taxes is one way to fill that gap. Other possible changes. In addition to scrapping the residence nil-rate ban, other tax changes are being floated. Let's take a quick look. Agricultural and business property reliefs. Right now, if you own a farm or a business, there are big reliefs that allow you to pass those on without paying inheritance tax. However, some experts are suggesting tightening these rules since they mainly benefit a small group of wealthier families. Pension funds. At the moment, your pension pot is exempt from inheritance tax, but there is talk that pension could be brought into the inheritance tax system, which would have a big impact on those who plans to leave large pensions to their families. Gifting rules. Currently, gifts you give before you die can also be subject to tax depending on when you give them. Some suggest extending the period from the current 7 years or even removing certain gift exemptions altogether. All these changes are still just proposals, but it's clear the government is looking at different ways to boost tax revenue. That being said, inheritance tax is a bit of a political hot potato. 47% of people in a recent poll said they think inheritance tax should be scrapped entirely. On the flip side, many experts argue that simplifying inheritance tax could make the system fairer and more transparent, even if it does mean more families end up paying. Small business owners. And let's not forget the impact on small businesses and family farms. There is a concern that any reduction in business property relief could hurt family owned companies, which are a vital part of the UK economy, employing millions of people. So, if these changes happen, especially the removal of the residence nil-rate ban, a lot of families could be facing higher inheritance tax bills in the future. If you have been planning your estate around these tax allowances, it might be worth revisiting those plans or at least keeping an eye on what happens in the October budget. Please don't forget to watch the video on possible pension changes